Hey everybody, I hope you're having a great Friday. This is your market update for January 6th, and it is a great Friday indeed if you were looking at the markets, either stock market or bond market. So the employment report that I've been talking about this week that came out this morning, if you look at it initially on the surface, it looks like the markets would have reacted negatively because the job creation numbers as a result of the report appeared to be higher than what the market was anticipating, and the unemployment rate dropped from 3.7% down to 3.5%. However, if you dig into the report a little bit deeper, the wage pressured inflation figures were actually lower, weaker than anticipated, and that is what the Federal Reserve has been looking at strongly, basically seeing what the impacts of the Federal Reserve, the Fed funds rate hikes, have on the labor market. And when you show that wage pressured inflation is actually going down, that supports basically that the Federal Reserve, the actions that they've been taking are having the desired effect in the labor market. And that's what they want to see, along with, your CPI, report, the general, consumer price index, inflation numbers coming down as well, and personal consumer expenditures coming down. So the market has reacted very favorably to those numbers. Stock market up currently over 540 points. S&P 500 and NASDAQ both up, as well as the Dow. Mortgage-backed securities initially opened the day up 28 basis points, but are currently up 69 basis points on the day, which is great news for interest rates. That's the most significant rally in the mortgage-backed security market that we've seen in a couple weeks. So a great day in the stock market, great day in the bond market, great day for interest rates as well. Hopefully that will continue. Remember, the CPI report, the Consumer Price Index report, which is a key measure of inflation, that comes out next week. If that shows that inflation numbers are continuing to cool, then we could expect further improvement in the bond market, further improvement in interest rates as well. So remember, I mentioned that we've had a slight tick up this week in interest rates. The market continues in the direction that it's headed, then I would anticipate that we're going to see another week of declines next week in interest rates. Keep your fingers crossed and say a little prayer on that one. Also important to note that basically when you dig into the employment report that came out today, there's a survey that's done as a part of that report. It's called a household survey. It's basically where households are called to find out whether or not they're gainfully employed. And when calling and doing that household survey, it showed that there is 717,000 jobs that were created. However, of those 679,000 of those were part-time jobs. Well, remember, we just came through the holidays, and a lot of places were hiring part-time for the holidays. Also important to note that out of that 679 part-time employees, 380,000 of them were basically, situations where somebody was holding multiple jobs. They got another job in order to make ends meet. So, when you dig into the information, some of these reports, and that's what the market, does sometimes, it'll react negatively, but digs into and kind of digests the information. When you start looking at things like that, even with a strong job creation number, it doesn't always look, it's not always as pretty of a picture as you would think it would be. So nonetheless, I'm not going to ramble on anymore, but it is a good day for the market. Hopefully that will continue. We'll update you again on Monday, and I hope that you have a great weekend.